For over a year, we've been waiting for the steel stocks to start benefiting from President Trump's 25% tariff on foreign competition. And this is exactly how it begins. A price increase here, price increase there, and the next thing you know, you're sitting on a Saturn V rocket going to the moon. I'm talking about the price hikes in flat-rolled steel, the most basic kind of steel that Nucor, our favorite steel company, just put through a couple of weeks ago. That's right. $40 per ton price increase 3 weeks ago. Then they tacked on another $40 this last week. You know what that's called? That's called the upcycle. I've been waiting for it, and it should allow gigantic steel producers like Nucor, the largest in America, to make an enormous amount of money when it goes right. It's surprising both the analysts and the market. Why do I think the cycle's finally arrived? Well, you have to understand, this industry has a weird trajectory. Things were looking good when the president slapped the 25% tariff on steel imports last spring. Protect our producers from Chinese dumping. They subsidize steel production. Then they sell it all over the world for less than their cost of production, and a lot of it ends up here. Oh, it was the right thing for the president to do. But steel distributors who were worried about the tariffs pre-ordered a massive amount of steel to avoid a potential tariff-induced shortage. That made sense. Then when the economy started slowing last year, well, guess what? These service centers ended up having way too much supply, a glut. That led to vicious price cuts that weighed down the whole group. Even Nucor, the best-run company in the industry. Well, Nucor didn't do too badly. They came close to making the numbers. I expected much better things after the tariffs went through. I was wrong. Instead, what happened is that the marginal players in the U.S. faltered because of the glut, a glut that was exacerbated by media hysterics about a potential steel shortage, at least according to Nucor CEO John Ferriola. Now, in the last 6 months, that inventory has finally at last been worked off. We know that because of these two successive price hikes that I mentioned in flat-rolled steel. Now, I know if you're not an aficionado of the steel stocks, that an $80 per ton move may not sound like much. But I've traded the steel stocks for 4 decades, and every single turn in the group started just like this. Couple of price hikes. Right now, Nucor is as lean as it's ever been, yet it's building new plants in anticipation of returning all sorts of higher-grade steels. You know, I think the Federal Reserve is about to cut interest rates, giving the economy a major boost. When that happens, I bet Nucor will be a terrific stock to own. In the past, every time we had an upcycle, our steel companies would ultimately be overwhelmed by foreign competition. The Chinese would start dumping again. But this time, because of the tariffs, it will be a different story. About 30 years ago, I lived near the headquarters of Bethlehem Steel. And that was, at one point, one of the largest companies in the world back when I was a kid. Bethlehem was long considered the country club of the steels, by the way. They were making so much money. Why not? It owned 2 beautiful, not one, but 2 beautiful golf courses in the Saucon Valley for its executives. It had the highest paid, most bloated workforce, but particularly at the top, that I'd ever come across. Back then, steel had been rising relentlessly, so the company had a ton of operating leverage. Every additional price hike led to a gigantic earnings beat. At one point, it was rumored in the, right before, let's say in the late 80s, that Bethlehem one day could earn $20 per share. Oh, and then the dumping began because our market was so robust. That led to an inventory bulge and price cutting across the board. We immediately shorted the heck out of Bethlehem Steel, my old hedge fund, because this cycle reverses even more viciously. You know what? We didn't cover or ring the register until the company went bankrupt. It was one of our best trades ever. In fact, I named my cat Bessie, the nickname of Bethlehem Steel, after that monster win. She had a lot of ticks and stuff. Anyway, now the opposite is finally occurring. Now it's too late for Bethlehem, obviously, but it's not too late for Nucor and UE. While the upcycle was interrupted by the excessive inventory build before the tariffs hit, we finally worked through that inventory. We know that otherwise the first price increase wouldn't stick, let alone the second one. That's why Nucor is a buy here. And if we get a couple of rate cuts, it will be a must-own stock. I want you to think of it as the chicken cyclical that will let you sleep at night. Chicken because it's the least dangerous of all the steels to own. It's got a good balance sheet. Nucor's got better risk-reward, making it the best way to play the new Fed-induced, presidential-endorsed steel cycle that I think is beginning right now. Mad Money's back there for the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.